Welcome to Gold and Silver, Diversification in the Age of Uncertainty, featuring Wall Street Journal best-selling author Robert Wiedemer in Washington, D.C., and from the Monex studios in Newport Beach, California, your host, Mike Maroney.
Good afternoon. My name is Mike Maroney, and I am coming to you today from the Monex Precious Metals studio. It's Thursday, April 6th. And today I have an opportunity to speak with the author of both Bubble Economy and Aftershock about something that he came to me 6 months ago and said, Mike, 2017 is going to be the year of uncertainty. And I truly believe that uncertainty will probably be the key catalysts as far as market price and market movement is concerned. And if you think about what's happened over the last 6 to 7 months, once again, Bob, you were right on the button as far as that situation is concerned. Now, interestingly enough, over the last week, we had some issues based on domestic politics. When President Trump was elected, he spoke about three things: repealing Obamacare, he talked about tax reform, and he talked about economic stimulus. And last week, it looks like the health care bill maybe have fallen off the table. And if that falls off the table, the ease at which tax reform takes place suddenly changes. And does that potentially also affect the stimulus plan? Well, we've got a lot of uncertainty, but Bob, let me get your view on what took place last week and how that affects the markets.
Yeah, I think what took place last week was a huge uptick in uncertainty. We did expect Obamacare to get repealed and replaced. We expected that to go fairly easy in a Republican Congress. It didn't even make it out of the House. Tax reform is even tougher. Alan Murray, the editor-in-chief of Fortune magazine, who covered the 1986 Reagan tax reform very closely, said very simply, if tax reform in 1986 was unlikely, he feels that tax reform in 2017 is inconceivable. So it's a very, very, very different situation than I think we expected even a couple of months ago. A lot of uncertainty popping up now. It seems like we're just having a hard time getting the basics of government done. In fact, this month we're going to be focusing heavily on keeping the government open at the end of April. So you're absolutely right, Mike. This is we've had a big upsurge in uncertainty, and you're seeing the market react to some degree in that it's having unusual movements. Just a few days ago, it rallied up almost 200 points on the Dow and closed for the day down 40. So you're getting these seemingly unusual, or not seemingly, but very unusual movements, not necessarily based on any particular real news, that I think just starts to show us, some underlying concern and uncertainty from what's happened in the last couple of weeks in Congress.
Now, after President Trump was elected, you felt comfortably that the stock market was going to move higher. And when we spoke last, you believed that the stock market is somewhat priced for perfection, which obviously means that they expected Obamacare to be repealed, they expect tax reform, and they expect potentially some stimulus. Does this mean that we're sitting in a situation now where stocks are even more overvalued than many people originally thought last week?
Well, I think that's exactly the point. It's not that the fact that a president has problems early on or anything. We've actually had so many successful presidencies do well, even with problems starting off. What's different is you say the market's priced for perfection. It expected no problems. It expected Trump to, good or bad, at least get things done. And the market expected more things good than bad. So certainly we were priced for perfection, and we haven't come down off that. And let's keep in mind that the reality is by the end of last year, we were priced pretty high already, and we've had some of the highest valuations in history. So that's the big issue, not so much as the presidency, but that price for perfection. Stocks are certainly there, whereas I might add silver and gold are not priced for perfection now, and I think quite potentially a better buy. But you might have some comments on that.
Well, it's interesting because when you look at the first quarter, we had the Dow up 4.6%. We had the S&P up 5.5%. people were very excited about that. But if you look over at our sector, which is well below all-time highs, gold was up 8.6% in the first quarter. Silver was up 14% in the first quarter. And palladium was up 18% in the first quarter. Are we starting to see more and more money maybe starting to come out of the stock market and into the precious metals as a way to ensure portfolios against these potential uncertainty types of events?
Well, that would be a normal pattern. It would be normal for silver and gold and platinum precious metals to move up in an environment where the stock market's having trouble. What's interesting, Mike, and I think very positive for gold and silver, is it did go up in the first quarter even more than stocks. That seems to be, I think, a very bullish sign. But I think going forward, we're going to continue to see that movement into gold and silver for more typical reasons of just growing uncertainty, growing unease with a stock market that is highly valued. Remember, just because a market's highly valued and rising doesn't mean there isn't uncertainty underneath. I mean, .com 2000, the market was going up and rising. We'd had a great trailing 12 months to March, and then kaboom, the bottom fell out. So high valuations may feel good when they're up, but they really also usually mask a lot of uncertainty and instability underneath that could kick off at any time. I think that's one reason gold and silver are doing well now.
Bob, you're working on a new market uncertainty index for us here at Monex because you felt that it would be the perfect tool for prospects and investors to utilize as a way to determine what potential products should be in their portfolio. Now, I know you're thinking about domestic politics. You're also thinking about foreign politics and geopolitical issues. Obviously, we have the French election sitting right out on the horizon. And then before I walked into tape today, I noticed that they said that North Korea just fired off another missile now that they know President Trump and the Chinese president are together here in Florida. How do you think all of this ties in? And can you give us a little bit more insight as far as this new index you're creating for investors?
Sure. I'm creating a market uncertainty index to help investors navigate the waters of uncertainty. Uncertainty is not like a light switch. It's not on or off. Uncertainty will vary. It can rise dramatically and fall. And those are going to mark, say, points for investment or for, times to pull back. And I might add, it's not just for silver and gold. It's for all investments, stocks, bonds. Uncertainty affects all of these. So I think it's a good tool. I think it's a great tool for investors to use in 2017 in this age of uncertainty. And it certainly does incorporate exactly what you're saying. Two key elements are domestic policy uncertainty, international policy uncertainty, then two economic elements, stock market uncertainty, commodities uncertainty. I think these are going to be very, very important in 2017. A lot going on there. I talk about it more in my write-up and description of the index. But certainly you hit on one key point, Mike. International uncertainty, not just domestic political uncertainty, but international political uncertainty is rising with the thought that we may, as President Trump said, go in on our own and deal with North Korea. At the same time, we already have a lot of strains with China, and China would not like us going in our own and dealing with North Korea, even if they have their own concerns about North Korea, kind of their problem stepchild. Bottom line here, lots of uncertainty. As you said, submarine launched ballistic missiles going off or underwater launched ballistic missiles going off from North Korea. French elections, absolutely all part of the index and all rising greatly right now in terms of the uncertainty surrounding all these.
Now, as usual, Bob, at the beginning of this year, you called it. You felt that both gold and silver would start to move higher. Needless to say, we've already seen some very positive movement in both of those metals. The PGMs, platinum and palladium, are also starting to heat up a little bit. A lot of people seem to be focused in on the Fed, and it almost seems as if everyone thinks that if interest rates go up, then precious metals go straight down. But if you look at the historic precedent of those events, that really isn't the case. Do you feel that even if the Federal Reserve continues to raise rates, that gold and silver is a quality addition to individual investors' portfolios?
No, I think the interest rate increase will be very positive for gold, contrary to conventional wisdom, simply because they will be negative for bonds, for stocks, and a little bit for economic outlook. It's going to affect mortgage rates, and housing has been a big part of our recent recovery and our economy. So it's going to affect housing markets. It's going to affect to some degree even the car markets. So there's a lot of uncertainty created by rising rates that I think more than offset any negatives to gold, because gold is not an interest-bearing asset. So I think that it's absolutely an issue that will lead to more uncertainty, which will push up gold. And I might add, the Fed's not also talking about raising rates. In the recent minutes released on their Fed meetings, they're talking about reducing the balance sheet, which means that essentially they're going to start selling bonds rather than buying them. I'm not sure they'll do that, but the fact they're talking about it and so forth, I think is raising uncertainty and raising concern over the stock and bond markets, which I think will be positive for the precious metals markets.
Now, obviously, if the Fed's talking about selling some of the paper that's on their balance sheet, they still have to find buyers. And if we reach a situation where potentially they want to sell, in essence, isn't that almost somewhat of a covert way of raising rates?
Oh, absolutely. And it will effectively raise rates. Also, the reason the Fed is buying is we don't have a lot of other buyers for stocks at current interest rates. Now, at higher interest rates, you may find them, but that's just the point. It will raise interest rates if the Fed starts selling bonds. So, and this would be a very unusual situation since the financial crisis to have the Fed selling bonds as opposed to buying them. So instead of backstopping the market, it's kind of coming out hurting the market. Not sure how. Well, I'm sure, I suspect how stock and bond markets will react is negative. But again, all of this is part of the uncertainty. It's exactly what are they going to do and when. And again, it would be a big change for the Fed to do something like that, even to talk about it as they are now.
Now, interesting, back in 2008, Bob, you called the top of the real estate market. You were right on point as far as what was about to take place with the financial crisis. You know, recently you've talked about how the bond market, after 40 years of being in a bull market, it was starting to roll over and potentially could be ending. That precious metals would be a key player in 2017 because of uncertainty. Are you still a believer that even with the recent price increase in precious metals, that right now it makes sense for individual investors to add metal to their portfolio?
Well, absolutely. I think it makes sense that you don't necessarily buy the assets that are priced for perfection, but you buy the assets that have come down and have a good chance for rebounding. So just like if you bought stocks in 2009, you certainly would have done better than if you bought them in 2014. So, excuse me, in 2007. So the point being is, yeah, it's good to catch, buy low, sell high. And I think that case can be made much more strongly for precious metals now than stocks. Not that everybody should abandon stocks or bonds, but I think hedging more and adding some precious metals to your portfolio is a good thing in general. And I think in particular right now the timing is quite good.
Fantastic. Well, when Bob puts something together like this uncertainty index, individual investors, institutional investors, and even prospective investors have an opportunity to utilize a tool provided by somebody that has been able to call the markets over the last 10 to 15 years almost in a spooky way as far as being right. And we believe that we would love to provide this index to you, the prospect, the individual investor, so that it will allow you to feel more comfortable in making investment decisions as far as your individual portfolio. We'll also be speaking with Bob in the future about the things that are taking place and how he feels they'll affect the market. But Bob, it was great speaking with you today, and we'll chat again soon.
Thank you, Mike. Great speaking with you too.